All right, guys. Good evening. Welcome to another video session where, like I told us in my group, we're going to analyze some major currency pairs in the Forex market. So right now, we're going to start with the top-down analysis for us to be able to determine what position of trade we're going to take concerning the British pound, United States dollar. That's the currency pair we'll be analyzing today. So like we all are aware, my students, you know that we start from the weekly time frame to determine the structure of the market. So we're on the daily time frame. So, go up to the weekly time frame. Okay, this is the weekly time frame of the pound USD or the GU. Okay, what we're going to do here, we want to determine the structure of this market. Okay, from a weekly time frame. Okay, now we all know that what the market is doing in the weekly time frame is that it entered into a range. Okay, initially before now, somewhere in 2014, it was trending down up to this point, 2016. Thereafter, it continued a bullish trend. I see this as a pullback from the bearish structure or sentiment. Okay, now it's entered into a range here. You can see practically what market is doing here is ranging. Okay, but when it got to this point, there was a breakout, as it were, a breakout from that range about to happen here. Okay, now we can see a clear trend to the upside. All right, so the new trend actually began on the 16th of March 2020. Okay, so we can actually take our reference date from here and see that the market has actually started trending to the upside. You can see from here, you can see what the market is doing. Okay, let me bring up the candlesticks. Okay, you can see that clearly this is an uptrend. We can see a higher low, higher high, higher low, higher high, higher low, higher high, higher low. So this market is actually, making an uptrend. So the structure of this market is bullish. Okay. So now let's drop down to the daily time frame and see what this market is doing on the daily time frame. Okay. Now, when you look at the daily time frame as well, you see that this market is bullish. Okay. The market is bullish. This is a clear uptrend. Okay. This is a clear uptrend. You see a pullback here. Okay. You see a pullback here by the time you bring in your Fibonacci. Okay. By the time you bring in your Fibonacci, pull this market from here to this point. Okay. To this point. Okay. You see what the market is doing. Market actually found structure here and, reversed from this structure level. Okay. Of Fibonacci. So you can see that the market is actually retraced into the 38.2% Fibonacci level. Okay. And has continued up. All right. So, what we need to do again, we need to drop down to the 4-hour time frame. Let's leave the Fibonacci levels. They will help us, bring out our levels also, our support and resistance levels when we drop down to the 4-hour time frame. Okay. We're doing pure price action analysis. Okay. Fine. So let's drop down to the 4-hour time frame and see what the market is doing. When we drop down to the 4-hour time frame, we see clearly that the market, okay, is about in a range. Okay, you can see this is a horizontal range that the market is currently doing now. Okay, you can see that support that was provided by the Fibonacci retracement tool is still a good structure level for this market, even in the lower time frame. So we're going to look at this. We're going to put our eyes on these levels. Okay, they are very key in price action. Okay. So what we're going to do next is this. We'll look at the possibility of trading this market in a range. Okay. Let's see if there's that possibility of trading this market in a range. We've seen that this level is a key level. So what we need to do is that we need to mark out this level in price action. We've also seen that this level also, it's a level in price action, is a structural level, in price action, this point, and this point also, okay? So what we can do also is that we can just mark out our levels from the, from the 4-hour time frame, okay? We can take our levels from the 4-hour time frame or from the daily time frame. But from the daily time frame, we can see that this is a key support level. So we're going to see try as much as possible to maintain this level, this levels in price action, okay? So what we do, let's mark out our levels at this point in time. Let's mark out our levels. Let's take it from here. Let's take it from here and mark out our level up to this point. Okay. Let's see what price is going to do here. Let's extend this to this level, okay? See if we could drag it down a little bit. Drag it down here. And this one down here, okay? Now, okay, let's zoom out a little so that we'll be able to pick out certain levels, okay? Let's zoom out and see if we can pick out certain levels, okay? So you can see what we're saying. This level is also key here. Okay, let's extend it to this point. Okay. All right. Let's see what else we can do. Since we are looking to buy these markets. Okay. So here we should see here as what? As a pull, as a retracement. Okay. Let's take this point as a retracement. How far this retracement will go, we might be able to determine that with the Fibonacci tool. Let's see if we'll be able to do that with our Fibonacci tool. Okay, so from here, let's take our Fibonacci tool up to this point and take it to the right and see. Okay, all right. So now you can see that this level is also a key level in price action. Okay, it's also a key level when you extend it to this other side. See, it's a key level in price action. So we can see price bouncing off this 61.8 Fibonacci level, okay, to the upside. All right. So what we can do here again is that we can extend these levels. Okay, we can extend these levels up to this point, so we can mark out our resistance levels here. So what we can do, let's pick this our tool again and mark out this level here. Mark out this level here. Mark out this level here. We can extend this. Okay, fine. We can change this to another color to differentiate support from resistance. This is a resistance level. Okay, we can change the color. Let's see here if we can make the color slightly red. Okay, that's fine. All right. So so what we can do here is that we can see how we can trade this market to the upside. Okay, taking it from here, but we need to see what the candlesticks are doing here. We want to see what candlesticks are doing here at this key level of support. Okay, we can see whether we can see, let's see whether we can find some candlestick pattern that will enable us to take this market to the upside. Okay, so we've seen here that at this structure level we can see We can see, all right, okay, here, what price is actually doing is that price has tested this level, support area of Fibonacci, and then has not been able to break through, and is going to the upside. All right. So this is another level again. We want to wait for market to break. Okay. Two things we can do here. We can allow price to get to this level. Okay. To get to this resistance level, you can see that this level is a very powerful level in price action, because over here you can see several times price has not been able to break this level since March 2021, sorry, since March 2021. Price has not been able to break this level. Okay, it only broke this level in February, but it didn't go far. It still came back here to continue to test the level. So this level is key for us. Also, this level is also key, but how many times the price tests this level? Okay, so I don't see this level as a very sustainable resistance level. Okay, I rather prefer here, because price has tested this level several times, and it just tested this once, and then there was a rejection down, down price. Okay, so so two things we can do here. We can take a long position to this point. Okay, then from this point we short the market again. All right. So the other thing we also need here is this. When we can put our three indicators we're going to need here. Sorry, two indicators. One, we're going to need our simple moving average, okay, and our RSI to give us additional confidence on what to do with this market. Okay, so let us introduce our two moving averages, simple moving averages, moving averages. Okay, let's bring up our moving average 1, moving average 2. Okay, now let's just go and configure these moving averages. Okay, this is 1. Let's configure this one to be our 50 moving average. 50 moving average. Okay, 50 moving average. This other one, we can make this our 200 moving average. Our 200 moving average. Let's leave the color, change the color to black. Okay, let's change the color to black. Okay, and say okay. All right. So where we are now is that clearly you can see that if here the strategy here is that when price is above the 200 moving average, it is a bearish sentiment. Okay, and when price is below the 200 moving average, it's a bearish sentiment. So we're in a bullish sentiment now. We are feeling a bullish sentiment. Okay, and again, this crossover here, for the 50 moving average crossing the 200 moving average is also a bullish signal in price action. Okay, so let's see also what our RSI is doing. Let's see what the RSI is doing, relative strength index. Let's see. Okay, at this point, our RSI is at the buy zone. Okay, so what we should be looking at for in this market is a buy opportunity. All right, we should be looking at for a buy opportunity. We can buy this market up to this point. Our factors of confluence are one. There is price is bouncing off this key level 61.8 Fibonacci level. Okay. Also, you can see at these two levels of 61.8% Fibonacci and 50% Fibonacci levels, these two moving averages are crossing at this point, showing me and signaling me that at this point that there are more buying pressure here than there are selling pressure. Okay, so these are two factors of confluence. So at this point we can take a long position here. Okay, we can enter in long position here if the market resumes. Today is Sunday, so what we need to do is that we'll wait for the London session and see what price is going to do here. So at the beginning of the London session at about 8 a.m. Nigerian time tomorrow, Monday, just come as early as possible to come and watch this market. Okay, we're going to enter with the 4-hour time frame. Okay, 4-hour time frame is going to be our entry time frame. Okay, so guys, you can see that we've been able to do analysis here without really, using any other, fake strategy out there. This is our own strategy here in Zingo Academy. So let's see how this market is going to play out tomorrow, Monday, at open of the London session. We're going to take a long position on this trade to the upside. Okay, so I will return back here to tell us how we are going to set our our take profit level and how we are going to set our stop loss level. So what we're going to do now, I'm going to show you how you're going to set your stop loss. Okay, now, so we're going to set our stop loss at this level here, 61.8% level, Fibonacci level here. Okay, slightly below it, you can see is a structure level. Slightly below it. Okay, that is when this market resumes on Monday. We'll be looking forward to setting it below this level here. It's slightly below this level, okay? And our take profit is going to be here. Okay, so this market should give us a risk to reward ratio of over 1:3, over 1:3. And for me, it's a very profitable risk to reward ratio, okay? So guys, that is all I have to say here. And I hope you understand what I did here for my students. You should understand it. Any other person watching this video, if you have any question, please you can ask. You have our contacts at the description. Okay. If you also like this video, please just like this video and then subscribe for to this channel. All right. And please don't forget to turn on the notification bell so that you can get notification when next we release new video. All right. Thank you very much. Until I see you again. Bye bye. Have a wonderful day. Cheers.